Welcome back. Well, as promised, let's get chatting with the management of IMFA, that's Indian Metals and Ferro Alloys. We have Mr. Panda who joins us on the show. Hi, Mr. Panda. Well, it's been a difficult quarter, and the commodity market on the whole itself, has gone into a bit of a dizzy. But you have seen many cycles like these. My question to you is, the EBITDA number got absolutely trounced in the past quarter. Tell us, were there a couple of one-offs out there? Explain that to us, and adjusted for that, what is the margins that would have been likely in the past quarter and the way ahead? Go ahead.
So good morning, Nigel. Good to be on the show as usual. Yes, I mean it's been a difficult quarter, but leading up to this, we have had 5 or 6 quarters of strong pricing for commodities, and that has enabled us to achieve all our objectives in terms of paring down debt, rewarding shareholders, and building up a kitty for our expansion plan. But unquestionably, what has happened during the quarter gone by is that this is when a sort of a cycle inversion happens briefly, where prices start coming down, but costs are at their peak. And that is what clearly happened in this quarter, because both thermal coal as well as metallurgical coke prices were absolutely at their peak. And that apart, given the sharp depreciation in the rupee vis-a-vis the dollar, our foreign exchange exposure, both in terms of certain derivatives as well as our working capital, which is dollar denominated, being PCFC, so both of these taken together, the foreign exchange impact was of the order of about 20 crores. And besides that, we also had a one-off in terms of a CSR expense booking of about 10 crores in the quarter. But not to take away from the fact that clearly ferrochrome prices have corrected, as have other commodity prices. But the good news is that we are now again seeing ferrochrome prices pick up from a low of about low 80s, 84, 85 cents to the spot market in China. As of this morning, the price which was declared is about 92, 93 cents. So we are starting to see again a reversal in terms of ferrochrome prices picking up.
Okay. Currently in Q2, Mr. Panda, what would that price be if you can give us the absolute number versus say in Q1 and the year gone by?
So, if we look at our blended average pricing, considering both prime as well as some substandard that we sell, so that was about 102,000 in Q2. The interesting thing is that if you look at Q2 of FY23, the year gone by, that was also at 102,000. So the difference here is about 150 crores extra in terms of costs, which is what translates straight through to reduced margins at the as far as the PAT is concerned. And this has primarily been on account of thermal coal, where coal prices have gone up from about 3,500 rupees a ton to 10,000 rupees. Of course, that had now subsequently eased off to about 6,500 to 7,000 rupees. And as far as met coke prices are concerned, we were our consumption from stock was costed at about $640, $650, whereas the fresh procurement that we are doing is in the range of $430 to $440. Okay. So you can see the significant increase in costs. And going ahead, as far as Q3 is concerned, we do expect prices to cool off a little bit more, but costs to cool off much more than that. And therefore, net, we expect both Q3 and Q4 to be better than what our numbers have been in Q2.
All right. Mr. Panda, if I adjust for that forex element that you're talking of around 20 crores plus the CSR of around 10 crores, your absolute EBITDA would be north of around 100 crores in comparison to the 70 odd crores that we're talking about. Now, given that you're talking about an improvement in Q3 and Q4 from here on, and also you have a bit of a tailwind, I'm guessing, with regard to exports, since you export a large amount of it. First, is that a tailwind? I mean, net, is the rupee depreciation good for you? Point number one. And second point, what is the margin that we should be working with for the next couple of quarters at least?
Okay, so a couple of things. Rupee depreciation is absolutely good for us because we are 90% plus in terms of exports. And ferrochrome is a dollar-denominated commodity, so there is no cross-currency confusion happening here. So rupee depreciation is absolutely good for us. And in fact, the interesting thing, Nigel, is that while we are booking MTM in our P&L, but what does not obviously reflect through is the added benefit on account of the rupee depreciation. So a lot of people think that rupee depreciation doesn't work well for us because we are booking MTM losses. But what is not visible, as I said, is the impact on the top line and how it translates through. That is number one. Now, as far as margins going ahead is concerned, I'm a little reticent to put a number to that. You are absolutely right. Our EBITDA percentage in Q2 was about 12%. I do expect it to improve, several percentage points. That apart, we also have a one-off which will benefit us specifically in Q3. Unfortunately, I can't give much details beyond saying that there is a long-running commercial dispute which we have, where we have arrived at an out-of-court settlement. In fact, we will be issuing a notification to the stock exchanges, so watch out for that later today.
Okay, we'll watch out for that one. So, Mr. Panda, this one-time impact that you're talking about, it is related to Utkal C coal block. Is it around 350 crore rupees is what you're expecting to receive?
So the Utkal C coal block is, let me deal with that. No, this was a commercial dispute which we have had in arbitration, etc., going on for a while, and we have arrived at a out-of-court settlement. As I said, I'm constrained to talk about the numbers now because we haven't yet issued the stock exchange notification. But coming to Utkal C, that is another long-running saga which is fortunately coming to an end. So the vesting order has been issued in favor of JSPL, and we are expecting the first tranche of the statutory payments, etc., of about 20-odd crores to come in fact, any day now, and the entire compensation to come through within this current financial year. So that will also add a boost to our liquidity and a boost to the quarterly numbers. Utkal C appears in our books at about 378 crores. Okay. So we expect to get most, if not all of it back. But some valuation, etc., of leased out land and allied expenses, incurred to procure that land, get that land has needs to be valued. So we don't have a hang on the final number, but we expect to get most of it, if not all of it, back.
Okay, all right. Mr. Panda, just to confirm, there are two settlements that will be coming in. One is, the commercial arbitration settlement that you're talking about, which we'll hear about in the next few hours. And the other one is the Utkal C saga that's finally getting cleared out. And 20 crores is what you expect to receive. And on the whole, you're expecting more than 350 crores. Are we getting that correct? Or is there a risk to that 350 crores?
So, we don't anticipate a significant risk to the 350 crores. Some few issues here and there. For example, the leased land is for a period of 90 years, but 7-8 years have gone by. So what we have seen in terms of other such reallocations is that the prior allottee does not get the full value for 90 years. It's prorated down to whatever is the remaining period, because that that is the way they are looking at it. So some risk to the 378, but like I said, we expect to get most of it, if not all of it, back. But we will get a better idea of the Utkal C number in the next 2 or 3 months. When the valuation exercise is completed. And yes, to reiterate that there is a separate from Utkal C, there is another out-of-court settlement that we have arrived at to a long pending dispute, and that we will be intimating the stock exchanges later today.
Mr. Panda, I know you can't give us a lot of details on that out-of-court settlement there, but just an indication of ballpark, is it 50 crores, 100 crores, so that there's an idea as to what to expect from this compensation that you'll be receiving?
You'll have to wait just a few hours, because I was in fact very specifically told that it's not proper for us to put out a number at this point in time.
All right, so we'll wait for that, Mr. Panda. But what about the EBITDA number for this year? Halfway mark, you've done around 291 crores. Quarter 3 and quarter 4, since the rates will be locked in and input costs will cool off, will be a little bit better than what you saw in quarter 2. So by the end of this year, I'm guessing 100 crores for the next couple of quarters maybe. So should you end in the vicinity of around 470 to 500 crores of EBITDA for this year?
So, Nigel, I do expect that the next couple of quarters should, taking aside the one-offs in terms of the settlements and everything else, so that obviously we are keeping that aside. But purely from an operational viewpoint, yes, I think about 100 crores a quarter EBITDA for the next 2 quarters is something that we are looking at. Okay. You do know that there is a lot of volatility out there. Which way the Russia-Ukraine conflict blows can have a significant impact upwards as well. So with the caveat of how geopolitical developments pan out and how the energy crisis, because I think Europe is in pretty dire straits at this point in time, with inflation being in double digits in leading economies, and the energy prices and all of that. So those concerns remain. But despite all of that, we do see 100 crores EBITDA each of the remaining 2 quarters, and that's because where we are placed competitively. Because the moment we have seen time and time again, Nigel, as you referred to various cycles, that when we start coming to a 10-12% EBITDA levels, everybody else is underwater. So therefore, it is simply not sustainable for prices to be at these levels. And today we have the added advantage of being debt free. So long-term debt on the company's book is, I think, something like 10-11 crores, because those are vehicle loans which are not worth paying off.
Got it.
And so when we hit a situation of 10-12% EBITDA, you can be rest assured that a bounce is on its way.
Okay, all right, Mr. Panda. We have seen many cycles, and we have been in touch for the last 10 years or so. As you said, there is a competitive advantage that the company has, but things pretty hazy globally as well. It's been good chatting with you as always. Looking forward to that 100 crores per quarter in the next couple of quarters, given the risk as well that are on the table. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on markets as well as on the stock-specific action.